Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of January. To start off today, we'll start off with the numbers that we got at 7:30 this morning, of which one was the non-farm payrolls. So non-farm payrolls came out 156 on those. We were looking for a 175 number. It was within the range with a 4.7 unemployment rate. So everything as is, earnings up slightly. They were looking for a 2.7% increase year on year, came in at 2.8. So when you add those things up, what did we see? We saw the dollar rally back up over 102 on the dollar index, and we saw the stock market make some all-time highs. The Dow came within a whisper of 20,000, and maybe we'll see that next week. But good job growth. Everybody is still anticipating stimulus via tax cuts and such down the road. So there's a positive outlook for the economy right now, and we just want to make sure that it continues that way. If there are hiccups in the road, though, we will see a little bit of a sell-off in the stock market, and how deep a correction it is really depends on what those hiccups are. So right now, stock market's looking good, has caused the dollar to rally. We're continuing to see that dollar appreciation, which down the road realistically is going to hurt a few things. On the commodity side, it's tough to have everybody talk about inflation with the dollar rallying and kind of keeping a cap on the commodity side of things. So we'll keep an eye on that in the equities. Going into the grains, all the talk this week was one about rebalancing, two was about South American weather. So first, rebalancing. Everybody knows they have to buy 63,000 contracts of corn. They have to buy 34,000 contracts of wheat. They have to sell, or they have to buy only 6,000 of beans. So the rebalancing, whether it was short covering in corn and wheat this week or specs trying to front run that rebalancing, we did see some higher prices in corn. Corn was up 7 cents, and we saw March wheat get up to about 425, but still not take out that 429 area. So we saw that rallying this week. We'll see if it continues next week. Kind of seems like this is already baked into the market, and then when the actual rebalancing happens next week, you might not see much of a move. Also, when I talked about the rebalancing, we talked about South American weather. Now, if you're a bear to beans, you're saying, hey, we know it's a little bit dry in northeast Brazil, but rains are expected by this time next week. If you're a bullish on beans, well, it's way too dry, we're losing yield. Well, I kind of go with the bear on that one and say, you know what, they're going to get some timely rains. We're starting to see some harvest in Mato Grosso, so things are pretty good up in Brazil right now. As far as Argentina is concerned, the three different quadrants, south, central, and north. Central and north in Argentina, which has the heavier soil, is wet, and they're expected to get some rainfall again. With that rainfall, though, after it comes in the next 5 to 6 days, we're supposed to come through a drying out period. So the main concern right now is that you don't have all your corn planted and you don't have all your beans planted. Beans are about 93% planted, I believe, and corn's maybe 85% planted. So we're getting close to the end, but we still haven't finished the job. There are some people that are talking about reducing the acres that will be planted in Argentina to beans by about 300,000. So we'll see if that actually transpires down the road. But you never want to hear somebody talk about reducing production numbers. I don't think we're really there yet, but the market is tuned in and wants to have some verification on it. Now, next week with supply and demand report, if the USDA does come in and lowers their Argentine bean number from 57 down to, say, 55 or so, then there's going to be some cause for concern, and we might see a little bit more of a spec move on the upside. But we'll have to wait and see on that. Right now, I think the attitude is that if we lose any Argentine beans, it'll be more than made up for with the Brazilian beans. So that is where we are with the ags for the week. For the overall week, corn up 7, beans down 10. Over in the energies, we've seen a sideways trade. Everybody, or all these hedge funds, are talking about $60 crude. Everybody's hesitant to go that far just because they know how OPEC cheats on production cuts. We've seen a little bit, but it's coming off very high areas, so they're still producing more than what their production agreement was about. Now, on January 21st, they're going to have another meeting, and they're going to talk about the cuts and see where they are right there. So that might be a pretty important weekend for energies going forward. Gas, distillates, both of those products up very large in stocks this week, so we'll see if that continues next week. Over in the livestock market, our analyst at R.J. O'Brien is looking at possible reversal in this cattle market. We closed lower today, only not substantially lower, but we did go a little bit or close lower. Interesting week where sale barns opened up again, and here in Iowa you're hearing 125s in the barns, yet in the country you're hearing only 117 on the cash. So they ended buying early this year, or not this year, but this week. Packers did, so maybe they are getting the amounts that they need out of the sale barn, and they don't have to go to the countryside for the bulk amount. As I said, our analyst is turning more and more bearish on the corn, or excuse me, on the cattle market, and possible downside to 108 would be the first target, with 104 eventually. So kind of keep an eye on that. Hogs, also you're trading still around 64 on the Feb hogs, with the index sitting right around 57.5, 58. Those won't see first notice day or last trading day, till the end of February, or not end of February, but Valentine's Day in February. So as we get through January, maybe towards the second half of January, we start to see a little bit of convergence between the index and where those futures are at right now. So really kind of not an exciting week here. Everything's kind of stayed in their ranges. We got through an unemployment report. We saw export sales this morning, which were awful for ags. So that kind of left a bad taste in people's mouths as the week ended. Going forward, next week, Thursday, big day, we're going to see, first of all, our regular export sales at 7:30. Now, we're going to compare those to this past week's and see if there's any change. If we see the same amount in the sales number next week, well, we're going to see that slowdown, and we might be able to test the lower end of the range in beans. Over on Thursday as well, at 11 o'clock, we're going to get quarterly stocks, and we're going to get our January supply and demand estimates. So it's going to be a big day on Thursday. People are going to prepare themselves for that by reducing exposure before that Thursday report. We're going to see the rebalancing go through. Like I said, I saw a lot of products be bid up this week, and I think that that's already kind of played its course. So we're probably not going to see as big of an effect next week from the rebalancing as we did this week. Weather-wise, pretty good, but keep an eye on it. I don't think we've lost any bushels yet, but if patterns do stay intact, there is a possibility. So that is a wrap-up for the first week of 2017. End of broadcast.